Everybody's desire is to be able to double their money in a short period of time. How many times have you wished on a shooting star to have six figures in your bank account when you wake up in the next morning? I'm here to assure you that it is feasible. It's not just a fantasy. Welcome to the Financial Flow. Please like and subscribe to our channel and turn on notifications to stay up on our latest videos. The Rule of 72 by Albert Einstein. This rule was initially mentioned by Luca Pacioli, who is known as the father of accounting. When creating financial goals, studying economic trends, preparing for financial goals, assessing investments, and assisting you with debt, the Rule of 72 is used. Calculating how long it will take for an investment to double while earning a set interest rate is how it operates. Here's how to figure it out. Take 72 and divide it by the expected rate of return. For instance, divide 72 by 5 if your interest rate is 5%. The result is 14.4. You will need to work for this many years to double your money. This rule has a lot of benefits. For instance, you can easily and rapidly assess whether you are keeping up with the times. Additionally, you can make sure that your financial decisions are being made in the appropriate way, because it indicates how many years it will take for the value of the initial sum to decrease by half rather than double. It can also be used to calculate inflations. Having stated that, there can be certain drawbacks to applying this rule. For instance, it can only be used with assets that compute compound interest once a year. Due to its inability to calculate rates below and above 6% and 10% respectively, this rule also has some accuracy issues. Nevertheless, resist the temptation to let these drawbacks drive you away from the Rule of 72. Contact a financial advisor who can help you by thoroughly explaining this rule and directing you in the right direction. Compound interest. The Rule of 72 only applies to compound interest, as was previously established. The key to financial success is to comprehend the principles and potential of compound interest. Let's talk about compound interest after we've talked about the rule itself. The great thing about it is that your earnings will increase as your money is invested for a longer period of time. In other words, the cycle continues as the interest from your initial investments is added to your original investment. In essence, invest your money in it and then set it aside. Now, you'll apply the Rule of 72 to determine how long it will take to double your present funds. Divide your interest rate, let's say it is 6%, by 72. 6 divided by 72 results in 12. You will double your money in this amount of time. When it comes to compound interest, look for one with a high interest rate because the faster it doubles, the higher the interest rate. Contact a financial advisor and request the best advice. Check your bank balance growth rate using the Rule of 72 and compound interest. Investments. Using the Rule of 72, you can assess your investment performance. We all wish to invest at some time in our lives, and you can utilize this guideline to gain valuable knowledge about how long it will take for your money to double. As a result, if you are thinking about investing, the Rule of 72 can help you estimate when you might get 100% return on your investment, as long as you consider the concept of compound interest. The Rule of 72 will work in your favor regardless of the type of investment you make. Inflation rate. There may be inflation at the moment, according to the report. What does this signify though? The rate at which prices typically rise over a predetermined length of time is known as the inflation rate. The inflation rate affects things like home products and services, for instance. Simply said, it costs more to purchase the identical term than it did at this time last year. We can estimate how long it will take to defeat inflation using the Rule of 72. By doing the math, we can see that the price will double in the following 24 years if, for instance, inflation averages to 3% annually. But if the inflation rate maintains at the present level of 6.8%, 72 divided by 6.8 is 10.6. So prices will increase dramatically in just 10 years. By applying the rule, you can budget ahead of time to stay ahead of the curve and avoid being slowed down by inflation. Savings. There are many benefits to using this technique, one of which is the ability to predict when your savings will double. Where do you think of first when it comes to keeping your savings? Keep your savings at home. Is that it? This is obviously too hazardous and losable. Is it traded on a market? So while there is a great probability of your money increasing, there is also a greater chance of losing money. Maybe you should create a savings account at your neighborhood bank. If you're fortunate, your savings account could earn 1% interest, and to be honest, this is typically the easiest target to hit. Setting a goal for saving is a smart idea, and so is setting a budget for saving. But you should also be aware of how long it will take to recover your initial investment. Let's now examine a few applications of the rule. The time it will take for the investment to double is 72 divided by the rate of return. Let's imagine, for instance, that you want to save $1,000 in the bank. Let's also assume that you will receive an annual interest rate of 1%. Thus, 72 years is equal to 1% of 72. In other words, if you invest $1,000 today, you should have $2,000 in 72 years. However, I'm rather certain that you won't be alive in 72 years to receive $1,000 profit. There are lots of investment plans available that can ensure an annual return rate between 4% and 7%. Just do some research and meet with a financial advisor. They'll be able to show you much better paths to take. Let's utilize the same illustration from earlier now. You still have the $1,000, but you now apply it to a savings plan, like an index that offers a 5% annual interest rate guarantee. Therefore, 72 divided by 5 equals 14.5 years. As a result, you won't have to wait 72 years to double your investment. It will happen within 15 years, regardless of how much you invested. It's also secure. 5% is only an illustration. Actual rates can be higher. The rule of 72 is a practical mathematical calculation that can be used to determine a variety of things. This could entail calculating how long it will take for your savings to grow or how much money you need to earn to keep up with the inflation rates. The one lesson we consistently learn is patience out of all the things you can apply to this rule. So that you don't have to wait too long, begin your journey toward financial freedom today. Thanks for watching. Don't forget to leave a like and subscribe to our channel for more content like this. Have a good one.